Hello and welcome to another update video about ADA Cardano. We continue to move in this sideways range that we also have identified on other charts. Okay, so pretty meaningless price action within those range boundaries. I'm gonna add a lower range boundary here as well, as I did it on the Solana chart. Even though here ADA looks a bit weaker because ADA is just sort of hovering around the lower boundary of that range. The lower boundary of the range is defined by the swing low from the 1st of May, which was formed here just below 42 cents. So a downside breakout would likely send us down. And maybe I can add an arrow here if I find it. Arrow would likely send us into the lower, let's say, into the next Fibonacci box down there, which is defined between 36 and 38 cents roughly. Okay, so that's what I'm watching. The labels, microstructures are not so meaningful. I mean, it's generally, you know, anything that happens within those range boundaries is actually pretty meaningless. I call it noise. And the labels don't really have any, let's say, strongly predictive character or anything. You know, I could literally, for the downside move, right, I'm tracking potentially a triangle. Now, the triangle could be technically completed. It could be, right? So we have, for example, the third wave low that bottomed here around the 13th of April, then an A, B, C, D. I could even say, okay, maybe the D wave was here, the E wave here, and we're now breaking down. But if that's the case, okay, fine. But the downside pressure isn't strong enough for me to favor a downside breakout yet. It could happen, but therefore I leave it open maybe for another extensions, even possible the C wave extends. So therefore it's pretty meaningless, right? But I think what is worth knowing is that until we, or as soon as we get a break below that roughly 42 cent level, which is that 1st of May low, I think that will send us down as per the structure here, sending us down into this support zone down there, okay, between 36 and 38 cents. And then from there, the price could attempt another reversal. Is it possible to rally from here? Yeah, anything is possible, but I said before, I need some evidence for that. It is possible in this orange structure, which we would call then a diagonal pattern or maybe just a larger ABC structure. Bear in mind, it can always fail after 3 waves, so that's the yellow count. But essentially, it takes minimally a break above the green line there, 52.2 cents, to be in favor of more bullish interpretations. Now, that's not that it's unlikely. It's just that the microstructure needs to prove it first. Essentially, the yellow support zone is there for a reversal, and we shouldn't be surprised if the price turns around there. And we need to zoom out, you know, to see the extent of this, because we had a substantial rally into the March highs. This is now seen primarily as a corrective pullback, and we're literally just waiting for the first signals. I'm tracking the microstructures to understand when I see, you know, when there is, let's say, the first indication or evidence for a reversal. But at the moment there isn't. We just have to be a little bit more patient, and this correction continues to be a test of patience. One of the key disciplines, or let's say one of the key success factors actually in trading, right? It's all about being patient, okay, not taking trades out of boredom necessarily, which sometimes can be fun, but just be aware that you don't do this from an emotional standpoint. Yeah, that's pretty much it. I mean, I could also like change the trend lines to more like a triangle shape, but for me, that's more like a range. You also have this descending trend line. The price could not yet break above it. Maybe just pay some attention to it. I don't see it as very meaningful. And ultimately, it's the 29 cent level there. That is for me the line in the sand. So even though ideally I don't want to see more than just one more low, but if it extends, the price could technically use the entire area down to 29 cents for this entire correction, which started in March, and then could rally from there afterwards. Below 29 cents, probabilities for an upside follow through shrink dramatically, and we would start to favor more bearish interpretations, which at the moment we're just tracking by highlighting support. If support breaks, yeah, then we're looking at something more bearish. Below that level, the next support will be around 22 cents, which is our invalidation point here. Ideally, we don't get there, okay, because a break below 29 will already indicate that we are most likely going to see invalidation. So at the moment, the orange count, which is the direct breakout potential, it's more a bit like a hopium count. It shows that potential, but that potential isn't worth anything if the bulls don't make use of it. Yeah, that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.